Hi everybody, what's going on tonight? It's March 7 and we are live on YouTube and we're about to connect on we will be live right now on TikTok. So we're a bit late today, but better late than sorry. And we are about to start our live today. Uh, Hi everybody. Today is we are live, and I think we all set. We are a little bit late today, a little bit difficulty on our end, so we're gonna start right now. Today is March 7. As we all know, this is our series, Invest Your Way to Financial Freedom, using our ultimate framework as a simple way to invest while the goal is to maximizing your income while reducing your expenses, creating a positive net income so we can use that money to invest in liquid asset and also in illiquid asset. And it's a simple framework. Today is our fourth video. Please, if you haven't watched any of our previous video yet, make sure you go back and look at them. It's on our Facebook page. And I just want to remind you, my name is Elbozo from Combit Group. Our mission is simple. We want to simplify the business and investment world so you can be more educated about the financial world, how to invest, and your way to financial freedom. We want to inspire the next generation of investors so you can take advantage of the financial world and take your investment journey to the next level. No hype, just realistic strategy. Make sure you subscribe and follow us on TikTok and Facebook and also on YouTube. Uh, as usual, we want to start our series with the main topics, what happened during the week, and also what we expect for next week. And we go on certain other topic. Today, it's about talking about spending, the psychology of spending, and also expenses, how to manage your expenses while we are going to our framework. And lastly, we will give you some intake on what we think about the following week, the topic we're going to discuss. So we want to start, let's go straight into it. For this week, the main topic this week was, the war between Iran and US. Now, since we're living in a very divisive world and let's say very divisive United States, it was not a surprise when the war started. We have people who were already happy that it took place, and also there was people that was furious about the Donald Trump decision to go to a war. So while we're not here to talk about, is the right decision? Was it the right time by the president? We want to leave that a debate to CNN or Fox News to debate. But one thing we can agree on is the fact that the war have some big financial impact because it costs a lot of money and also it's gonna cost life. So with that being in mind, our focus today is to let you know how it can affect you, affect your pocket, regardless if you agree or disagree with the president actions. Uh, as for this week, we definitely had a short video that we put out there, making sure people really understand what's going on with the war. And I think we have a very positive response from the public. We have over 2,000 views. It was a short uh, way of letting people know, hey, regardless your point of view about the war, it's still gonna affect your pocket. And because of that, I think it's very important for me to go a little bit more deeper, to go in context where we get there and how, as investors, as people who's trying to protect our money, regardless, so we can understand how that's going to affect us and we take advantage of that by protecting our asset or just by reduce our spending for the time being. So if you didn't see our short video, you can go back and see it again, guys. The video is on our YouTube and also in our page on TikTok. So now, Now let me go a little bit talk about why the impact of the war will affect you guys, so we can understand, the really the impact of the war. Uh, so if you look at it, let's say if there's a long war, we say a long conflict that continue between the US and Iran, one key place that's going to affect is definitely the stir of arms. It's a very small little canal, we say, that's in between Iran and between the Oman and UAE. So those three countries are the one who make that little canal. And with that canal, the most important geographic is one of the most geopolitical place in the world, because why? This canal is a narrow exit of the Persian Gulf. That Persian Gulf is made of the 25% of the oil on the world pass through that canal. So if you think about it, if you have 25% of the world just pass through that canal, and if they block this canal because Iran is shooting at the vessels that pass through this, it's gonna be a lot of problem for the oil industry. It's gonna be a lot of problem, not only for those people, those gold, Persian gold countries that cannot export their oil, but also for the rest of the world. Because imagine everything is depend on oil. And if you don't have those oil, what's gonna happen to the price of oil? Again, we go back to simple economic term, which is supply and demand. When there is less supplies, what's gonna happen? You're gonna have the prices of oil gonna go up. And to give you context, is the Persian Gulf is made of 8 countries only, 8 small countries, relatively small. We will say Iran, Iraq, Kuwait, the Saudi, Bahrain, Qatar, and the UAE. All those 8 countries, they possess, hear that out, 50 to 63% of the oil reserve of the world. Imagine those there is a blockage over there in that region, how it's gonna affect everybody else. Oil, it's part, to put oil in your car, you need like gas to run your car. You need gas to fly the plane you take to flight. You need gas for that. Amazon shipping that your packages, all those truck, they need gas. The food production that we eat, they all need gas to run. We need gas for the transportation of the goods that we need from Walmart and everywhere else. So now, in the blockage, if the blockage in that area happen, then you take off 25% of that oil from the rest of the world, then you're gonna have a supply drop that we have already mentioned. So it's gonna cause high cost of oil prices, and what will happen? Then you got gas, price of gas, price of the flight that you're gonna take gonna go high, price of transportation and goods gonna go up, everything gonna go up, which will lead us to what we call inflation. And an inflation in that scale will cause a lot of damage in not only in the United States but in a global trade, because you can see that already since this week, since this war start. Guess what? Price oil prices at the pump in the United States is already up 40 cents, and this is something that we haven't seen for a while because it's happened so quick. It's happened so quick because 40 cents a gallon in the price of oil in the pump will affect your pocket, because every time now things start getting expensive, and you see that quick reaction to the price. And if you look at it in a global perspective, the barrel of oil, future oil, it's already at $91. It was a week ago, it was $67, and now it's up almost 30% increase. So in a global scale, you see the price of oil is already going up. And now we're gonna start feeling in a few more weeks, we're gonna start feeling the price of oil that's gonna affect everything, guys. And one thing that might not increase, guess what's not gonna increase? Your paycheck is not gonna increase as fast as you are gonna pay for things. So you're gonna become like very, you're gonna have, you won't have a lot of money to pay for those things because your paycheck is not gonna go up. So that's something like is gonna cause you a lot of pain for your pocket. So that's why we say in the long term, a war between Iran is not gonna just stay overseas. It's gonna show up in your gas pump. It's gonna show up at your grocery store, and also it's gonna get to your affect your investment account. The reason, especially for investors, if you look at what's going on in the market now, let's think about it. Not only as an individual, but if you are just an investor who's trying to make also money, it's gonna affect your investment account, and I'm gonna explain it to you. Now, geopolitically, if you see what's going on in the market the whole week, all the major investment platform, like entities like the S&P 500, all those investment indicators, they all go down. So the market itself almost being in red all week. Because why? Because the war have creating a lot of insecurity in the market. Not only that, you see all the companies now already, investors now start panicking and they start selling off those stocks. And and if you look at, since people all start to panic and things start shifting, now there's not going to be a lot of investment. People are pulling their money away from the market. So it's signal a bad thing for the market and people are panicking. It's also signaling that, and one of the worst news also during the week is the fact that also the job report just came out on Friday showing that the US is losing 92% of jobs. 90,000 jobs the US have lost from previous month. It's just a bad sign that the economy were already slowing. And now you putting a war on top of it, that's gonna cause major damage in the stock market. So investors, everybody gonna be in the defensive mode, and we're already seeing that. To be going back to investment, I want to just like quickly explain a little bit how investment, how the investment part can also in general gonna be slowing down. For example, if you have inflation, right? Now, normally the market, normally for people who not the market, when you have like different people are not panicking, selling off, and you have inflation at the same time. So what's going to happen is inflation will cause the Fed to tend to decrease. Sorry, inflation will, because of high inflation, the federal government tend to increase their interest rate. Why they do that? They don't want people to invest more. They want the market to cool off because with inflation, a lot of prices become high. So what they do is increase your interest rate so people don't buy, the economy go down by slowing slowly go down and price go back to normal and price go back to normal. So now you have an inflation that's gonna spike, and also you have a job market when it comes to employment rate that's going up. People are losing their job. Normally, if there is no inflation and people are losing their job, the federal government will do the opposite way. They will they will lower their interest rate. When they lower their interest rate, so businesses can borrow more money and hire more people, and at the same time create more job. But in this case, this week, what's going on is a very complex balance because first you have a lot of inflation coming up, and also you got a lot of job loss. So in this thing, it's gonna be very complex for the federal government to decide where to go, which one to save, because either way is bad. Either way it can go very bad. So it's gonna be very complex. We're dealing with a very complex market investment community that I don't think I haven't seen this for a while, because either way you go, inflation gonna hit you and you're gonna lose jobs. So this is like what caused most of the confusion in the market right now. And we already seeing it. Everything being red almost the whole week. Me personally, our group personally, we had to make some very drastic strategic type of investment this week. Try to hide, but I can tell you, if you're in the market right now, with the level of uncertainty that's in the market, you can agree with me that almost there is no place to hide. And we have seen almost all sectors were down this week. So anyway, this is a time that I can tell you it's not a good sign. Everything pointing down that the economy is slowing. We have a war to deal with, and the best to do is to not panic. We don't want people to panic. This is not, you still got to maintain your calm. You still got to stay focused, stay invested. But what you need to do more than ever is diversify. Make sure that you are diversifying your portfolio. And if you can, I will say start. One thing you can do is start, streaming your position. Maybe you have some stock, you already get some gain on some stock, you might stream down your position. Some start cutting some take your profit. And in some cases you might take some loss. It's okay. You can always recalibrate. You can always focus on where the market is going. So it's gonna be hard. There's some very difficult time ahead, but as investors, you should know in the long term, if you stay invested, you will get rewarded. The market reward people who can stay in, not because of the market is going down. You start shaking, you start like pulling out, and then start panicking. This is not investing. Investing, it's very calculate what your move, what next, and you can go further. So if you haven't done so, make sure you look at our previous videos so you can know what strategy that we are following, and you can follow us, and we all can learn from each other. And now, for next week, this was overview about what's going on doing this week. For next week, we think like, it's gonna continue some uncertainty around the war, but we are looking at, especially Wednesday, we have the CPI report, which is the consumer price index on Wednesday, March 11. It's gonna indicate, this is an indicator of inflation to see if inflation is going well. We also have other inflation indicator coming up on Thursday, like the PPI, and also Michigan consumer sentiment coming on Friday. That's also another indicator of the economy strength and also inflation. Those are indicators that the Fed gonna use to determine how to go about it. So if they're gonna increase very much the rate or not, where to go. So we as investors, we also need to pay attention to them. So now, again, stay focused, look for those stock that's popping up anyway. There's stock that moving up. It's not all going down. So that's why you got to be in it now more than ever. You got to be deep in it. So we encourage you to continue and stay invested. And as part of our session, we always go back to see the kind of share with people what are the twist stock that we feel like did very well for us during this week. Maybe you can learn from it. Maybe you can learn from the stock that we have performed for us. For example, we have Fortitude Gold, which was like about the ticker is FTCO. It was about 6% up for us this week. We have also another stock called Salesforce, and it's 9% up this week for us. And Verizon also was one of the stock for us. It was like 1%. As you can see, there was not too much going on during this week. As far as it was very difficult. It was very, very difficult for us to find a very well good stock to work for us. But we hope for next week we have more clarity in the market, and then we can continue investing. Um, Now we're gonna talk about our main topic for today, which is the psychology behind the spending and expense management. So before we do that, we just want to remind you that this is our series, Invest Your Way to Financial Freedom, where we simply explain to you, simplify the financial market so people can invest, can take control of their financial freedom. So now let's talk about the psychology behind spending and expense management. One of the biggest mistake people make with money is believing that money management is purely mathematical. It's not just plugging numbers. In reality, it's mostly psychology. Spending is driven by emotion more than logic. People spend money because of the stress, status, convenience, habit, social pressure. And there's a lot of factors that play into us spending more money, which is marketing, social media. Nowadays, we're living in a social media world where everybody trying to flex their money, comparing their lifestyle to others. And some people feel like this gives them a good satisfaction, but they're only spending their life away. But they are not focused on what they need. And that's why we want to share with you that it's all about what you need, not necessarily about what you want, why you want to show off. Um, Understand the psychology of money is the first step toward controlling your expenses instead of them controlling you. So now let's talk about the main expenses and how to manage them. For example, there is like what we call fixed expenses. For example, we mean a rent or mortgage. Those are fixed expenses. As mortgage or housing is one of the biggest expenses you can have. For example, in general, your housing costs, monthly costs will cost you about 40% of your budget. So most of your money into your life, you're gonna spend it through your housing. And one strategy that we always advise people to look into to eliminate that 40% of your income, to keep that in your pocket, is do what we call house hiking, where you buy a house, you rent it, and then you have your renters paying for your mortgage, and then you stay in your house and you end up not paying anything. That's what we call house hiking. This is one of the way that you can invest in real estate and not paying zero money for your monthly income and keep that money and reinvest it. And other expenses we can talk about is insurances. We got car insurances, medical insurance, and another one. Uh, in general, you don't really need like to have all the insurances that exist in the world. And if you want to decrease your expenses for your insurances, you might just shop around, change a different type of insurances, and try to see if you can get a better discount rate. This is one way you can decrease your expenses. And also now talking about another expenses, which is car payment. You might have to for this year the way things are going, you might have to just hold on your car payment. Or instead of buying like a new car, you might just hold on buying a new. You might just want to buy a used car so you can decrease your expenses on your car payment, or try to shop around, to see if you can buy a cheaper car. This way, you can keep saving your money. We're talking about your phone bill, for example. For your phone bill, way to decrease that, you can definitely think about, switching providers. Maybe there's some good deal out there that you want to, switch and look around, switch providers. For example, me myself, I had a phone bill that was $75 a month. Then when I switched to another provider, I was able to have a deal on my internet bill, and the phone line was zero. So it saved me like $900 for the whole year. So this is one, way you can do it so you can save money on your phone bill. Other type of expenses we can think about is subscription. Subscription, for example, TV shows like Netflix, Hulu. If you are really tight in money, those subscription, they might really serve you. I understand people are stressed, you like the shows, but if you really, really tight in money, the subscription might have to go. So you have to be thinking about, is it your pleasure now, or are you trying to save to make sure you're ready when it comes to invest? And another fixed expense that we see a lot from people is student loan. I can tell you specifically about student loan. As a person who have been to school and who have, been to school and managing and dealing with student loan, I can tell you, if I had to do it again, I would say to be more cautious about, be aware of the consequences of a student loan. If I had to do it again, I would suggest anybody who have kids who's going to college, or if you just start thinking about going to college, I would say first, why don't you start taking community college class instead of going to a 4-year college that you don't even know if that type of bill you can handle it. Is it really what you like, especially? So instead of going straight to commit to a 4-year college and take all those expenses and take all those bill loans, it's better to start slow. For example, if you go to a community college, it's less money and you can start like working right away to take some entry level in your field and see if you like it. Because the one thing you don't want to do is go into college, 4-year degree, and then later on with all those bills, and then you say, oh, you know what, this is not for me, and you already waste a lot of money, you already waste a lot of time. So I would suggest, if you want to go to college, first go to a community college, and little by little, go back and add more education if you need it. And sometimes, to be honest, not all person really want to be in community in college anyway. So I think you got to be strategic, because you don't want to end up with a bunch of student loan. You start with a career that you don't even, the money is not even worth it. I see a lot of people who think, oh, I'm a doctor and I don't know, in some type of career, but the money they're making barely average. So it's really difficult to deal with that after so much time and money you invest in a career. So student loan, it's very, you got to be very careful. And if you already have a lot of student loan, there is some things that you can do to manage your student loan. And one of the powerful combination I can tell you is, first, you can enroll in an affordable repayment plan. Try to get your minimum a payment, a minimum that you can afford, because what's going to happen is, if you have, if you can afford the minimum payment, then you're gonna start making more payment. You make extra payment on your principal as possible. Because if something goes wrong, you tighten money, you can just fall back on making just the minimum payment. And there's also another technique called the avalanche method, where you pay the minimum payment on your loan, put extra money toward the loan with the highest interest rate. Once the loan is paid off, then you move to the next higher rate. So those two combinations seems like very well working for people. So that's why I advise, if you have student loan, use a combined method to reduce your student loan. And other techniques that people use for student loan is, for example, refinance your loan. Um, Refinancing replace your existing loan with new loan and lower your interest rate. A but refinancing federal loan into private loan will move the federal protection, like forgiveness loan. So there's other program that the government have when you are paying your loan that you're not gonna be benefiting if you decided to refinance. So that's something you really need to take in consideration before deciding to refinance your student loan. And also, one of the very common program that we have here in the US is the loan forgiveness program, which is for healthcare workers, teachers, public servants, and if you're working in some type of non-profit or government job, you might be qualified for those. It's a way to forgive your loan. The minimum requirement that if you're working for a government or non-profit, that like I say, making 120 qualifying payment, being in an income driven repayment loan. So those are things that you have to really take in consideration, if you're looking to have the loan forgiveness program. So it's a good program if you can manage, to be working for a company like this, and you definitely want to take advantage of that. Um, Now let's talk about a little bit more about some valuable expenses. So those are the expenses that can change depending on lifestyle or habit. For example, your groceries, where you can decrease it, use coupon, look out for good deals. For example, me, I love some couponing. Myself, I don't know, some people might call it cheap, but I don't really care. I'm really really looking for a good deal every time I go for my groceries. Your gas, it can go, depend on where you go, where you get your gas. You might want to look for where station, have the lower gas, so you can buy. Dining out, well, like I said, the economy right now, the way it's going, I don't think it's a good time right now to be spending too much money in dining out. That might be something you might want to eliminate by just like start cooking yourself at home. It might be time consuming and everything, but that will save you a lot of money in the long run. Entertainment, for example, the same as dining out. I will say, this is something like, you might have to not go and party for a while if you're trying to save money. Shopping, the same type of thinking for me. You're only gonna shop at this point what you need and avoid buying what you want at this particular moment. Those are the expenses that I think most people overspend without realizing how that eat away their money. Discretionary expenses now. We're talking about discretionary expenses. They are non-essential spending choices, including luxury purchases. If you gotta buy a luxury car or like a bracelet or stuff like that, you might want to hold off to it until, for a while. Vacation. I can tell you, you won't die, if you wait for a couple of months or even a year to reschedule a vacation just because you're saving money to invest. And those expenses are usually driven by emotion, marketing, lifestyle pressure. What are the real really need deal? Will need, yes. No, everybody needs some vacation at some point. I get it if you're working hard, but this time the way the economy is going, I can tell you the economy is not doing well. This is not the time to do yourself pleasure. This is time to really try to save strategically to invest and stay focused. Stay focused on what you need, not necessarily what you want. And best way to manage your expenses, I'll think overall, the goal is not to eliminate the spending. The goal is control your spending so it's aligned with your long-term goal. Here are some simple, powerful strategy that I think, you know, I can share with you guys. For example, track your money. You know, you cannot control what you don't measure. You don't know how much, like I see people that I talk to, they are surprised, amazed when they start like tracking where their money is going. Where you know where your money is going, how much you're spending in each category of your budgeting sheet. Most people are really shocked when they see how much they spend on small daily expenses that killing their spending, their wealth. So, and there is one rules that I see other people use, that they call it the 50-30-20 rules. It's a simple budgeting framework. I'm not a fan of framework when it comes to budgeting, but there's the rules that say 50% you spend on what you need. Make sure it's your housing, your food, and your transportation. 30% of your budget should be going to what you want, entertainment, lifestyle, and 20% should be going to your saving and investment. This structure keeps, according to expert, they say that this structure keeps spending balance while you're still allowing yourself enjoying life. But like I said, this is not the time to really focus on what you want right now because the economy is not doing well. So we want to focus on what we really need right now. And let me see. Another strategy also we want to share with you guys will be pay yourself first. Before you spending anything, allocate money to your saving, to your investment, retirement. Remember, wealth is built with what you keep, not what you earn. Make sure you delay impulse purchases. And one of the rules that I have, guys, I call it the 24-hour rules. Because if I want to buy something and I realize it's not something I really need and I'm not sure about it, guess what I will do? I will wait for 24 hours. And if I still want it after 24 hours, that's maybe something that I really want to purchase. But if I'm still like not sure about it after 24 hours, guess what? I'm not eating that. I'm not buying that. So that's maybe like it was a many time it was an emotional impulse a purchase. So make sure you guys really try to do anything you can do to make sure at this particular moment when you're gonna spend your money, this is something you need. If you have a specific strategy to manage your income, your budget, your savings, and your expenses, please drop it in the comment section so we can share. The goal here, guys, I come here every Saturday. It's not about being a TikTok famous or anything like that. It's about creating a community of new investors, new generation of investors. When you guys can be confident that you guys can control your life, you guys can learn from me. I can learn from you guys, so we all can help each other build that generation wealth, that freedom that we need by investing our way to financial freedom. So this is a community, guys. So that's why I would like you guys to share, like, and comment down below if you guys are really have any type of some sort of way you guys use to kind of save money and invest. So please share with me any type of ideas you have. And lastly, I can tell you, focus on values, not the price. Smart spending is not about buying the cheapest things or the most expensive things. It's about buying things that provide you with long-term value. Spend less on status purchases, impulse shopping, but spend more in things like education, health, experiences, and investment. So yeah, so this really was very interesting. We talk about a lot what's going on in the world, and I'm very, very happy to be here, guys. At the end of the day, wealth is not determined by how much money you make, but by how well you manage what you spend. If you can control your spending psychologically, manage your expenses wisely, and consistently invest, the difference you will create foundation for long-term financial freedom. I hope you guys enjoying today live, and we have discussed things, a lot of good things, good topic today. And if you haven't done so, please subscribe, like, and also follow us on TikTok and YouTube. Please go back. If you haven't seen our previous videos, go back on our YouTube channel. All our videos on El Boso Bosando is there. So you guys can go back and watch our 3 videos of this series. This is our 4th video we just went through, and we have more videos coming next week. Remember, this is going every Saturday at 8 p.m. Central Time. Next week, we're gonna talk about more of we're gonna go back to we are following our framework. Now we're gonna talk about now we talk about, for example, reducing your expenses. We're doing just your expenses today. The previous videos we focus on how to increase your income. So now with high income, less expenses, we have what we call a positive net income. With that positive net income, we're gonna use it not only to buy a liquid asset, but also we're gonna buy liquid asset. So we're gonna go through all this next week, kind of start explaining. It's gonna be the most fun part for me is the investing part, because we're gonna start talking about the stock market. What is it? How to invest, stock, bond, We're gonna get into a real estate investing. We're gonna get into a lot of good topics that are really, really excite me with this series. So I wish you guys all the best, and keep let me know what you guys think about of the series, what you like want to hear, what to see, how I can improve to make it more fun for everybody. This is our series, Invest Your Way to Financial Freedom. If you're new here, make sure every Saturday, 8 p.m. Central Time, you follow us, and we're gonna continue learn from each other. I'll see you next week, and have a good week. Again, I warn you guys, there is some difficult days ahead in the investment community, in the investment world. There's a lot of problem that seems gonna come up more. So you guys have to be very careful, enjoy yourself, and stay invested. I'll see you next Saturday. Thank you. Bye bye.